Do you remember about a year ago when there was news in the media that the real estate industry in China was about to crash and how everyone was scared that if that were to happen, that the global economy was going to collapse? Well, there's a reason for that. See, in the past few decades or so, China has moved from being a poor country to being a world power. And because of that, they created a massive, massive population of the new middle class. And the middle class are people that used to be poor, now have money, now can afford their own homes. And a lot of them have bought new houses, and they created a massive demand for new homes, not only to live in, but to park their newly found wealth for generations to come. So it's a way of creating generational wealth for your family into the future. Now, because of this, a lot of Chinese investment went into real estate, both internationally and nationally. A lot of companies sprung up all over the place that were building homes, investing in homes, and even non-Chinese companies, including those in the West, in the UK, in America, rolled out a lot of money into the Chinese real estate because that was the future, A lot of your investment, whether you knew it or not, were in Chinese real estate, which is why when the economy was threatened of China, everybody was scared. The government of China, of course, moved in to crack down on some of that because it created a lot of debt that people weren't able to pay back. The hope was, of course, that the real estate itself would appreciate in value and eventually cover the debt. Now, Hong Kong, of course, is a different country, but now it's part of China. It's been transferred from the British to the Chinese not so long ago. So now a lot of the rules actually fall under Chinese authority. The state of real estate investments in Hong Kong and China is a complex and ever-changing landscape. There are a number of factors that have influenced the market in recent years. Of course, we had the COVID-19 pandemic, which has had a significant impact on the real estate market in Hong Kong and China. The lockdown measures implemented in both countries have led to a decline in demand for property, as well as a decrease in the number of transactions taking place. The political situation in Hong Kong, like I've just mentioned, political situation in Hong Kong has also been a major factor in real estate market. The introduction of the national security law has led to the uncertainty and anxiety among investors, which has dampened the demand for property. The economic situation in China itself has also had an impact in the real estate market. The Chinese government has been cracking down on excessive debt in the property sector, which has led to a decline in investments. So like I said before, they were issuing out 100% mortgages, 1000% mortgages, with the hope that, of course, with all this investment pouring in internationally and the high demand on Chinese real estate, even though a lot of those buildings were empty, was going to compensate for that. Things just run out of control as it is with traditional markets. Despite these challenges, though, there has been some positive signs for the real estate market in Hong Kong and China. The long-term fundamentals of the market remain strong, and there's still a high demand for property from both local and foreign investors. So what does this have to do with XRP? I'm glad you asked. XRP is being used in Hong Kong for a number of purposes, including cross-border payments, we know about that, tokenization. XRP can be used to tokenize assets such as real estate and securities. This can make it easier to trade and transfer these assets. Equity releases. XRP can be used to release equity from tokenized real estate assets. This can provide homeowners with access to capital without having to sell their homes. So the way it is now, a lot of people who have invested or have got these ridiculous mortgages have a lot of their equity basically locked in an asset that's lost value since they bought it. And a lot of them need capital now because of all the economic turmoil that we've just experienced. It's the same around the world. We have inflation, economic turmoil. A good capital release would be nice, but you'd have to sell your house to get capital because a lot of people have most of their capital in their houses, in their real estate. In order to release this capital, you'd have to mortgage your house, say like people do over here. You can release a bit of your equity by mortgaging your house to the bank. However, the banks have run out of money. So no bank is buying any more real estate because they have their hands full. And the government has only just bailed them out. So why would they be going around offering mortgages to other people? And if you can't find anyone to buy your house, you're in trouble. With tokenization, that could change. The benefits of real estate tokenization include increased liquidity. Real estate tokenization can make real estate more liquid as it allows investors to buy and sell shares of properties more easily. Real estate tokenization can reduce costs associated with buying and selling real estate. as it eliminates the need for intermediaries such as lawyers and brokers and those big companies that are investing your money without you asking them to. Global reach. Real estate tokenization can make real estate more accessible to investors around the world, as it can be traded on a global blockchain network. Which means you and I, all the way from here in the West, can invest in the Chinese real estate just from our computers, just from our phones, without having to go through any intermediaries, by simply buying these tokens. However, there are also some challenges associated with real estate tokenization, including regulations. The regulatory landscape for real estate tokenization is still evolving, and there is some uncertainty about how it will be treated in different jurisdictions. Don't we know that? Security. There's a risk of fraud and theft associated with real estate tokenization, as it is a relatively new and untested technology. Complexity. Real estate tokenization can be complex, and it is important to understand the risk before investing. Very, very true. As expected, XRP is not the only token that's being used to tokenize assets like real estate. There are even some blockchains that are specialized in doing just that. But as you can see, the complexity, the regulations, the magnitude that you require in terms of liquidity to handle this sort of thing gives XRP an incredible advantage. Here are some of the real estate tokenization projects that I mentioned. There's one called Propi. Propi is a real estate platform that allows investors to buy and sell real estate tokens. That's dedicated. It doesn't talk about which actual blockchain it's using, whether it uses its own blockchain or it's an ERC20 token on Ethereum, for instance. I'm going to have to look into that. I haven't looked into that, I'm going to be honest. Estate Guru is a peer-to-peer lending platform that allows investors to lend money to real estate projects. So that's not crypto-based, but again, it is an online way to get involved in real estate by lending rather than actually buying homes. Brickblock is a platform that allows investors to invest in real estate projects through tokenized securities. Again, blockchain based, I can imagine. And here are some of the specific real estate investment marketing trends in Hong Kong and China. The government has been focusing on providing affordable housing for its citizens. This has led to an increase in investment in affordable housing sector, both from the government and private sector. So that's an opportunity. The rise of tech-enabled real estate. The use of technology in the real estate sector is growing rapidly. This includes the use of online platforms for property transactions, as well as the use of artificial intelligence and big data to analyze the markets. And then you have the increasing importance of ESG factors. Environmental, social, and governance are becoming increasingly important to investors. This is leading to a focus on sustainable real estate developments that meet ESG standards. Of course, as we know, XRP is carbon neutral and it is energy efficient compared to other tokens. So that's another big advantage for XRP. So in addition, XRP is also being explored for a number of other potential applications in Hong Kong. For example, the Hong Kong Monetary Authority, HKMA, is currently running a pilot program to explore the use of XRP for e-HKD, which is the digital currency of Hong Kong. Overall, XRP is a versatile digital asset that has a number of potential uses in Hong Kong. As the adoption of blockchain technology continues to grow in the region, it is likely that XRP will be used for even more applications in the future. Here are some of the specific examples of how XRP is being used in Hong Kong. Fubon Bank is a Hong Kong-based bank that is using XRP to tokenize real estate assets. This allows homeowners to release equity from their homes without having to sell them. Ripple, the company itself, is a blockchain company that is using XRP to make cross-border payments. Ripple has partnered with a number of banks in Hong Kong to offer this service. Okay, so that's super bullish. And then, of course, we have the HKMA. Now, this is a big one. HKMA is currently using a pilot program to explore the use of XRP for e-HKD. This would allow people to use XRP to make payments in Hong Kong. Let me just read that line again. This would allow people to use XRP to make payments in Hong Kong. So just let all that sink in. If the digital currency of the country is being explored right now to be effectively XRP, the tokenization is naturally going to be picked to be done on the XRP Ledger. And this is the thing, China at the moment is using Hong Kong as a kind of test bed for the things that they're going to roll out on the mainland in the near future. For example, recently China opened up Hong Kong as a crypto trading hub in Asia. They opened crypto trading to retail people like you and I can go in and trade cryptocurrencies as we like. It also allowed people to travel from mainland China to Hong Kong to do the same. So even though cryptocurrency trading hasn't been opened to the masses on the mainland in China, it's only a matter of time before the successes of Hong Kong are rolled out across Greater China. This is not financial advice. Do your own research. I will see you in the next video.